Capital. Thanks for coming along. From an overall kind of perspective, the FTSE has been pretty weak the past few days, weaker than some of the other European markets today, for example. Why the negative sentiment here?
It's a surprising one at the moment, the UK market. It's had, of course, a good start to the year. We've seen it hit that sort of 6-1 level at the beginning of January. And from there, it's made no further gains. You look at sort of the Dow, as you say, the other European markets, they've carried on pushing up further. And I'm actually looking at it as an opportunity as it pulls back to be buying into dips and be looking to get into this weakness. I don't think that it should be long-lasting. Of course, with results this morning, the real story is Libya at the moment and the worry over oil. And as you've already mentioned this morning, people are looking to put their money elsewhere. But it surprises me that the UK market is pulling back compared to the rest of Europe.
Okay. Do you believe that the Bank of England minutes made any difference to the UK markets, or is it just more sort of reiterating more of the same dilemma that we know the Bank of England's already facing? Yes,
I mean they're in a very difficult position. Everyone's wanting them to do something. The whole sort of inflation being high, raising interest rates. It's not as simple as that this time round because of all of the money that's been pumped into the economy and because of the outside pressures. The sort of your CPI is coming in from other things rather than people thinking that we're in a boom. We're not at that stage yet. And I think we will feed it through sort of over the next year, 18 months, and we'll see that start to come down.
OK, let's get into some of the earnings that are out there today as well. Travis Perkins shares are lower after the firm reported a 7.5% drop in fiscal year profits despite a number of their businesses performing better than the markets last year. Now, CNBC actually spoke to their CEO, Jeff Cooper, who told us that the firm continues to increase market share in 2010.
The data we've got shows that in 2010, our revenues grew faster than the market by about 6% in retail and by about 4% in merchanting, and that's a pretty good level of sales increase and represents market share gains.
What do you make of the movements we've seen today in the shares of Travis Perkins?
Well, again, they've been overshadowed by sort of wider sentiment. They started off well this morning, opened up about sort of 2%, I think it was, and then as the market's pulled back, people's just been taking profits. It's a stock I do like. Coming down towards sort of £10 near-term support. I think they do have further to go, but it's just going to be waiting to see what happens from these, as I say, these wider influences before you start buying into the market.
Colin, any thoughts on the sort of investor exposure to construction, property sector?
We've had some, in house building, some slightly more encouraging news just in terms of sentiment and early trading, but I would have thought that's still going to be pretty challenged, and I would have thought things like Travis Perkins are going to reflect perhaps concerns on house building and activity in that sector as well. I think that a lot of those stocks have had quite a big rebound from Christmas, and I'm not too sure they'll hold up here where they are.
OK, let's just talk about one of the other companies as well that has been out with figures today, Logica. Now, this company reported a strong finish to 2010. Full-year revenue actually rose 1% to £3.6 billion, with the fourth quarter numbers up by 4%. Now, we also spoke to Logica's CEO earlier. My colleagues on the morning shows have been very busy. Andy Green said the firm is well positioned for growth as the market recovers in 2011.
We've started very well in 2011. That's what gives us the confidence going forward. Okay. Also, we produced clean results with our, all the restructuring we do now in the business we include in our results, unlike most of our competitors. Sure. And that means, the cash flow that we're generating off those results is much better.
So benefiting from the restructuring story, Logica is one of the companies that seems to be fairly optimistic about 2011 recovery. Is it too early for CEOs, do you think, to be speculating that 2011 will be a better year? Surely there are still risks that there could be a global impact.
Well, I like anyone who tries to be optimistic. I think we do need it. There's so much negativity and it's so easy to do. So I appreciate his thoughts on it. For sort of the restructuring side of things, it's about 30 million that they've spent on doing that. So second half of the year is where I'd be looking sort of at this stock, let them get the next results sort of out of the way, get it updated, and then I think we can look at the profits.
OK, let's leave it there. Marcus is trading director at MB Capital. We're going for a quick break now.